Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 26, 2020. In this video, we're going to cover two things. The primary goal of the video, I wanted to do a coverage of the coal sector and some potential trade setups there. Before I do that, I'm going to do a quick update on gold. It's completely unrelated, but I figure I'm doing the video, get it out to you guys, and kill two birds with one stone here. So, a quick update on gold. Gold's all about the dollar, or largely, predicated on what the dollar does, because gold is dollar sensitive. Trades inversely the dollar. So the last updates on gold, I said we had a setup here for the dollar. If the dollar can break out above this downtrend line I just highlighted here, and you also have some price resistance around the 93.19, 93.20ish level, and so far a rejection. It tried to pop it and couldn't hold it on a hourly closing basis, and so we're still right there. We're on that trend line. Little rejection so far, a failed breakout attempt. There's a minor trend line I'm watching as well right here. If we get rejected, so far I wouldn't call it a rejection. I'd just say we're trading right there at the trend line. Okay, it's not really much of a rejection, but just watch that. If we do start to move much lower, take out that trend line, it could give us another leg down, and it will still have the divergence anytime soon on a new low. Now that means, again, if we made a marginal new low in the coming days or weeks here, this is DX again, dollar futures. You can see right here, you would have the RSI divergence, and here's your PPO divergence. It would just continue to build. It would look something like that. Maybe this line might be down here and something like that. Again, assuming a reversal. So that's it. Still watching a breakout for that level, and so far a little failed. Again, it wasn't much, but we tried to pop there and failed, and so that's put a boost under gold and silver today. Here's silver. Now, not by mere coincidence, silver also hit that trend line that I've been targeting, and we hit, and that was the next sell signal. We need to we've yet to take it out. Like I always say, support is support until unless broken. So you have the trend line support and the 26,417 level right there. It's been acting as support recently. Was resistance here, that reaction high, reaction high, reaction high there. So that's the story of silver. Now, silver also popped. Just like the dollar has that little small uptrend line. This is, by the way, silver 60-minute chart. All these charts I'm covering right now on the gold and silver and the dollar 60-minute charts. So we popped above there. So that's near-term bullish, and that's, again, giving us a little bit of a lift today. I think you can see it down here. These are silver futures up about 3%. Resistance there. Next resistance would be that reaction high, and so forth and so on. In fact, you know what? I'm going to add a trend line right here. This is what we need to watch. This downtrend line in silver futures. There you go. And that comes in with that 2737 resistance level. So you have dual or intersecting resistance levels right there. Altogether, bigger picture is this symmetrical triangle. Bullish if it can pop that. It's going to be near-term bullish, and near-term bearish if it breaks below the pattern, which pretty much today's lows are the recent lows. Okay, so that's silver, and then gold. Of course, let's update gold real quick while we're here. The gold is pretty much bounced off this trend line. You can see here, I've had two almost overlapping trend lines. What I'm going to do is pull this lowermost trend line down now. I'll take this one. It doesn't matter. They're coming off the same point right here. Why? Because we had a little punch down through there, just like the dollar had that slight whipsaw false breakout today and a move back down. Same thing with gold. So what you're looking at here is this is a starting point on that trend line on GC gold futures 60-minute chart. And you've had several reactions there, including this one today. So same story, support is support until unless broken. So here's our trend line right now. Like I said, I just tweaked it down slightly because I had it overshooting the trend line right there. And if that was an overshoot again, you have enough reactions now to move the primary trend line right here. So that's the story of gold. I don't want to force a downtrend line. You could probably do something like this, comparable to that trend line in silver. Let me move it up. It's not a symmetrical triangle, but it is a triangle pattern, especially if we get a reaction here. But just like silver, you have the trend line also coming in at price resistance right there, about 1951. That gets taken out with conviction. The dollar fails and it starts to move lower, takes another leg down, and silver breaks out. This is probably where gold's going, back to that 1997 target, and maybe that 2029 again. Those resistance levels overhead. Downside break should open the door for that ultimate preferred swing target down here, about 815 to 944 or so. Okay, and on to coal. Okay, coal is a sector left for dead. It's obviously a sector in decline. With the big move towards green energy in recent years, coal is anything but green. It's probably one of the dirtiest fossil fuels that we have out there, but it is still around. It's still in use. These companies are still there. So I'm going to go over trade setups. This is more again of a trade setup. Or setups in this sector, not actionable trades. There's a difference there. Actionable trade is something that's already broken out and in a bullish uptrend or a bearish downtrend, and then at that point you look for objective entries or add-ons on pullbacks to support resistance, etc. So here it's more of a setup. The ETF KOL doesn't really jump out to me. The chart doesn't really look very compelling, but I can see there is some pretty decent resistance here around 76.23, and if it pops that, it's not a big move, but you're targeting about $80 would be your first target there on coal. But it's the individual stocks that really stand out more to me, so let's go over those. What I need to do is load the coal sector right here. That's going to give me a watch list on the side of the components in this sector. There's a couple of them out there. TC2000 uses IX1050 coal. I'm going to show you that in a second. We'll also look at I guess they have this IX, I missed that one, 1040. Let's see, it looks to me, yeah, it's about the same components, same thing there. And then there's a Dow Jones coal sector. Where's that? Somewhere in here. Here it is, DJUSCL, the Dow Jones US Coal Index. Okay, so on this one, we'll just start here. You can see we have this wedge type pattern. We have potential, what I call potential divergence. It's not confirmed. This is their PPO. It's still pointing lower. That's a momentum indicator saying the momentum in the sector is currently down. It could continue down. We don't have any buy signals at this point in time, so we have these divergence lines that are potential divergence. Maybe it never materializes or results in a trend reversal. Maybe we go a little lower and then we get a divergent low at some point in the future. So I'll continue to keep my eyes on this sector and then look for a breakout above the downtrend line right there. So that's again one possible scenario. Just want to say it's setting up for a potential bullish move. And let's go back to the other one, and I'll go over the individual stocks because that's what stands out to me are some of these individual setups here. Okay, so there's not a lot. Video won't be very long. Looking at about little over a dozen names here on individual coal stocks. What you're going to note, I don't know, it might just be cut off in the corner the way I have this screen here. I might be able to move that just a hair for you over here. If I can, here we go. Yeah, right there. Okay, these are the dividend yields. Now, you'd want to double check this. I'm going to talk a little bit about the dividends real quick. Super high dividend yields. They're saying, wow, Randy, that's crazy. Stocks yielding 17.5%. A lot of these stocks have these super high yields. You need to understand a dividend yield is a function of two things. Obviously, it's the price of the current dividend, and they're looking at the most recent dividend and compared to, divided by the stock price there. And so when you have a security that's falling, if it's maintaining the dividend or they're reporting the last dividend, which may or may not be the next dividend, that's going to increase the yield. But be careful. Typically, stocks that are in a decline, again, this is a sector in a slow decline. You're going to see over time when the dividends get real high, or any stock, you should be suspicious. Anything that's yielding 17.5, if that's the accurate dividend right now. I'm not verifying these dividend rates. You have the potential to have the dividend either cut or completely eliminated. And I know at least one of these stocks just recently ceased their dividend due to COVID. These are coal mining stocks. You have these miners down in caves are in close proximity, so they had to shut down operations. And at least one of them I'll get to in a second. I think it's Consol. Temporarily suspended their dividend, but it was about 4 months ago, but they haven't reinstated it yet. So I just want to point that out. So Yeah, if these stocks can perk up here, if there's some fundamental change, maybe it's something to do with the election, maybe Trump wants to vote of the coal miners and those towns, and does something positive for the sector. Who knows? I'm just trying to point out that the sector is setting up here, and there are some pretty attractive dividend yields. But again, I would be very leery of buying these stocks, especially solely for the dividend. I'm looking at these as quick hit and run, get in and out trades if we get the buy signals I'm looking for. So on NRP, first one here, there's a pretty clean downtrend line, needs to be taken out. And just above that, we have some price resistance here around 1194. The posture, the PPO is not very hot right now. It's moving up, but it's rolling over right at the zero line. That usually delineates bullish and bearish trends. When it's above right here, trend is bullish like it was there. And when it's below the zero line, the trend is usually bearish. And so we had a little bit of, where it crossed here recently, a little bull run there, not much, but we're below. So again, it needs work. It has work to be done. And that work would be, of course, a price breakout above that level, 1195-ish downtrend line. Nice upside potential. I wouldn't do the video if there wasn't a lot of upside potential. I just have to throw out all the caution. These stocks have abysmal fundamentals, like I said. But again, how much of that's priced in? And it doesn't take a lot when everybody's thrown these stocks away, given up on the sector. Nobody's watching it. Those are the sectors I usually like to find, and you can get some quick pops, and the returns are above average, or the return potential. That would be about a 26% rally up to that 1492 target. And if this one continues, if it does break out, gives us a buy signal, possibly move all the way up here at about 6219. So we'll keep an eye on that one. In fact, I need to set an alert right there, and let's move on to the next one. NC, NACCO Industries, there's a nice clean downtrend line. Divergence, again, it's not confirmed, but if we break out, you get a buy signal here, we start to move up. I'll have to give targets. I don't have targets on each and every one of those, but there's some resistance right there. And I would say when that's taken out, this would be a nice, a likely target up to about 2951. From where we're at now, again, we would have to get a buy signal, but that would represent a rally of about 42%. Let's just end it there. There's a reaction high there. I'll just in case I don't follow up on these and any of you take these or any of these stocks, that would be another potential target. I think it would really take a lot to get us up here, but that was a big support shelf right there. That's where the bottom started falling out when COVID hit, and who knows, maybe this one gets all the way back up there. That'd be a big run if it did. Let's move on. ARLP, Alliance Resource Partners. I don't really have a downtrend line or even a really good horizontal price level to trigger a buy signal, but this one's walking up this trend line. I mean, maybe you buy pullbacks to the trend line. Again, I don't know if this dividend is accurate or sustainable or even still being paid. That would probably be, calculate off the last quarterly dividend paid, showing a 48% dividend yield. And so again, if we get any kind of bullish fundamental catalysts in this sector, or maybe sometimes you don't, maybe the technicals just play out. These are, there's some potential, quite a bit of upside potential in these stocks. Also a lot of downside potential. I should talk on both sides of it. Again, it's a sector in decline. Let's just, make that clear if I didn't make that clear a dozen times already. All right, potential downtrend line, HNRG, but what I'm seeing here, it's this common theme. I'm seeing divergence building in a lot of these stocks. It's not as if these divergences haven't played out. We had positive divergence right here at this point early on, and that was good for, we had a breakout, nice clean downtrend line. I wish I was watching this one back then. And from the point it broke out, this stock rallied 84, 85% right there in a matter of just a few days. Actually, the breakout occurred. We came in back to about the breakout point right there, and then it rocketed about 85%. The divergences continued to build, so they're even larger up to this point right here. You have divergence 1 right there. Divergences continued to build, and from that point it rallied about 77%. So that's why I'm doing this video. This might not be your cup of tea, these stocks, and if so, you probably should have stopped the video already and say, I have no desire to trade or buy or touch coal stocks. But if you can catch these rips, trader. I don't care what I trade as long as there's, profits to be made. So that's HNRG. I wish I could give you a nice buy point on this, but I can say this: birds of a feather flock together. So as I do the video, if you were interested at all, replicate these charts, replicate the trend lines, the price resistance levels. If you get, I'm only covering just over a dozen stocks here. If you get, 3, 4, 5, especially 6 or more of those breaking out, you're probably going to see broad-based buying in the sector, and then a lot of these can go as well. What I like to do, I prefer over the ETF. I like to take a shotgun approach. These are high risk, high return potential stocks, so small amounts, sprinkle little bits of cash, and buy anywhere from a half dozen to a dozen of the best looking names out there. Spread it around. Some are going to really rip. Some might lag behind a little bit. Some may even not pan out. But again, that's the whole benefit of diversification. You're going to win some, lose some, and if you have one really big winner, that should really, cancel out any losers, any that you get stopped out on, or maybe just some dead money trades. As I'm eyeing this chart, I want to add one. I think I can add a trend line right here. Yeah, I sure can. There you go. That's pretty nice right there. So there you go. You have dual resistance levels just overhead that, if popped, could lead to a rally. And who knows, man? This is where it started to fall off a cliff with COVID. Maybe these stocks get back to that point. And if so, you're talking a lot of gain potential, about 186% run, if so, showing me about an 18% dividend yield on that one too. SXC, SunCoke Energy, symmetrical triangle pattern. That's it. Let's just keep it simple. There's your downtrend line. Pop above that would be bullish, although you do have some resistance just overhead around 358. Again, if you wanted to step in here, you could very aggressively buy at support right there with a stop somewhat below at the bottom of the, at this uptrend line right here, and swing it up. First target would be really the top of the triangle, but this is approaching the apex of this triangle. So, it's going to break sooner or later when you're at the apex. And so there's your potential targets right there, all the way from where we're at now, 309. I'd say this is probably the sweet spot. Somewhere in here would be my preferred swing target right now, if this sector can start to break out and get some traction. What would that give you if you took it here at the trend line to that 439-ish level, about 40% return? That's just showing me about a 7.5% dividend. So as long as the stock doesn't stop you out, even if it took a while to get there or trades around, you get paid to wait, assuming, again, they do not eliminate the dividend or cut it, which is always a possibility. That was a sector. I already covered that. CCR, console, this one is showing me a 54.6. It might have been console. One of these I read on that just recently eliminated their dividend. I think it was this one, or suspended it back about 4 months ago due to COVID. But a nice setup. Look, nice clean downtrend line in which to trigger an objective long entry right there. A lot of reactions along the way. It's been building positive or bullish divergences for a while. Price resistance just overhead. So you might get an early buy signal on pop of the trend line, but the safe bet, at least before going to a full position in this one, wait for that 403-ish level to be taken out. Targets 453, 497, possibly more. Those are just some near-term targets. If that $5 targets hit, that's about a 33% run. And again, not even counting any dividends that may or may not be paid on that. AREC, American Resources Corporation. I don't even have a chart marked up on this one. Looks very thinly traded. A lot of these are relatively, or some are even very thinly traded. So I'm just going to move on since I don't even have the chart marked up on that one. ARCH, Arch Resources, took out this trend line recently. Breakout, hit resistance, 3507, back tested. It's testing at 3507 again, so that's the level. If it can pop that 3507 level, that could be the catalyst for a run up here at about 41. These stocks tend to move fast. That would be about 17.5% run. The last time it popped that resistance level, 3507, was right here, and it did it in 2 days. Doesn't mean it's going to do it in 2 days again. Doesn't even mean it's guaranteed to get to 41 again. But if it does, That's a quick 17% run, maybe more. Again, it all depends on what kind of technical and fundamental catalysts that we get in the sector, if any, coming up. CTRA, Contura Energy, there was a symmetrical triangle pattern it broke out of, but it's kind of floundering around. Again, none of these, it's unlikely, I should say, that any of these are really going to rip hard until we get broad-based buying in the sector. So in other words, one or two may break out, they may start to run, but without sector participation, they're likely to stall out, as this one did at that 494. That's pretty decent price resistance right there. So there's your number right now. We already broke above the triangle, break above 494, should open the door for a run. I don't have any additional upside targets marked, but I can tell you that would be first target right there, about 660. Not a bad move to go from 5 to 660, and then maybe that reaction high there. METC, this one you have a potential inverse head and shoulders bottoming pattern here. This would be neckline. I have really, probably the upper line to be safe. Let me mark that for you. Let's say right there around the recent high, about 317 should do the trick. Inverse head and shoulders pattern is inherently bullish, bottoming or potential bottoming pattern. Right there would be your left shoulder. Here's your head. There's your right shoulder. And again, the line, maybe I had before drawn a downward sloping neckline, and I think that's valid because that comes in and captures that left shoulder, and that would have it breaking out. And you can see there was an impulsive green candle, and so then what happened, it recently back tested it. So I can say this again, there's just a little more upside in a lot of these to really pop and get them to run, I think. But this one, looks like an impulsive breakout and a back test of the trend line, the neckline, I should say. But it has that price resistance. So we already back tested once. Ideally, you don't want to see it do it again, although it could. But the next objective buy point would be a break above 317. First target 387. You could take the measured target of an inverse head and shoulders pattern, which is the widest part, to the neckline. Again, there's a little spike there. If I just use the neckline that I'd drawn that way, add it to where it broke out, and that would give you a measured target. And that would, since that comes a little above 387, there's price resistance. I think that's a nice place to take profits. If it really can get some traction, that would be your next target up there around 496, and that might give you the measured target if you use that high point right there. Take the head distance from the head up to that highest point there. Add it to the where it broke out, and that puts you right there at that 496 level. So that's certainly a potential target, and that would give you gain potential of about 72%, not counting if this dividend is still intact, about a 7% dividend yield. Of course, that's an annual rate, so you'd have to hold the stock for 1 year, assuming the recent dividend is held, to earn 0.13% on your money. Just wanted to, that reminded me, before I did the video, I looked at the weekly charts as well, and the one that stood out, and I just showed you a head and shoulders pattern on another stock, but here's that NC I covered earlier. Back in 2009, look at this beautiful inverse head and shoulders pattern there. Left shoulder, head, right shoulder, perfect symmetry on the shoulders, nice clean neckline, and boom, it popped, and it certainly ran. It exceeded the, it really, but of course it ended at the last bear market, and so it was just launched the bull market it's in. But what's interesting as well in that one, again, I already covered this on the daily time frame, is you have a nice trend line, long-term trend line, and we're at that trend line support. So there's a case that can be made, without a breakout. There's two ways I go long a stock, typically a breakout above a bullish chart pattern or resistance level, or a pullback to support. And that's what this is. You have a reaction high here, you have a gap right there, the bottom of the gap, and that's where we're at. So you have intersecting dual support levels there on NC. All right, next one up, let's go back to the daily time frames where I was working off of before. I think I just covered, what was I on? CCR, I think. Yep, there's CCR. And AREC. Breakout, back test of this 119 level. So there's and it's 123 right now. So again, a case can be made. It's not really, again, there's no momentum in the sector now. You could take a shot at it here about that 120-ish level with a stop somewhat above. or you can wait to see participation in the sector. PPO is in constructive territory now, but this one's really not, it's kind of flopping around, not really going anywhere. But again, if you're interested and you're looking for, you know, a sector that might have some potential, this is, you know, these are some trade ideas. I've been struggling, guys, to find, you know, trade ideas with attractive risk reward profiles, you know, and above average profit potential. So this is one that certainly on my radar now. ARCH, put in a divergent low right there. That's what I like to see, positive divergence. And just to give you an idea, off that divergent low, you know, Arch Resources rallied about 90% almost. And where it's at now, a couple things that stand out. You can see the downtrend line right here. Recently broke out right there, back tested, broke out, and it ran into this 3507 resistance. So that's the number now. We had a back test already. Who knows? Maybe we back test again. If we do, or continue to back test for a while, or drop below the trend line, either way, this is your next support down here, 2682 besides the trend line, but that's your resistance, about 3507. A pop above that looks smooth sailing right up to the $41 level. That would give you a quick 16 or so percent. Here's did it in 2 days. I don't think it was Arch I covered before. I don't know if my watch list flipped around. I think I'm going in the same order here. If I did cover this one already, I apologize, because I know there was another one I covered in here that had a 2-day gain up there. But that's it. So that's Arch. Break above 3507 takes you up to about 41. CTRA, Contura Energy, breakout, hit the 494 level. And would offer you an objective long entry. Again, we're not seeing really a lot of strong bullish momentum, although this one, look, it's been in an uptrend since March, since COVID took it down here. You know, it's making a series of at least higher lows right there, not necessarily higher highs. It did have that high there, but here's the levels to watch right now. 494, break of that takes you up to 690 or 660. That's your first target. 942 is your second target. So your objective entries are a break above 494 or a back test of these intersecting trend lines, either or. And that would be, you know, let's just say it turns and goes from here. The profit potential is about 132% up to that 942 level. To get to 660, it would be about almost a 60% return. So again, if it gets back down there, and the majority of these stocks are also at or near support, that might also give you an objective entry there. METC, that one, I believe I would have covered this just a second ago. I sure did. Okay, my stocks got out of order. Sometimes that happens when I'm going through these charts. I had a watch list of the sector components, and then when I went to that weekly chart, I think everything got jumbled up. So yeah, I might have covered a couple of these twice. Forgive me, I'll make sure I covered them all before I stop the video. BTU, Peabody Energy, just broke this 252 support, so we could see a little bear trap here that could clear out some stops on longs, maybe suck in some shorts. So if we can reverse and get above 252, that should be bullish, and most likely be the catalyst for move back to the downtrend line right there. Here's your downtrend line. That would trigger a longer term, more powerful buy signal. And if so, what we would do is this potential divergence, PPO is heading lower, could turn this up, give us confirmed positive divergence, and then a breakout above the trend line would take us up to 441, 523, and potentially all the way up here to 867. HCC, Warrior Met Coal, downtrend line. There it is. Pretty simple stuff. Really forms a descending triangle pattern right there. Boom, boom. So breakout above the trend line. Look for these reaction highs. That'd be an obvious target. I can see one other resistance level right here. Price resistance about right there, down to that reaction high. So let me give it a target zone, we'll call it, from about 1882 to 1887 or so. Again, with the buy signal coming a pop of there, or you can make a case for an objective but somewhat aggressive long entry on a pullback to anywhere close to that 1446 level. Consol Energy, CEIX, same thing, dancing on support, 491. You can pick it up here. I don't know if that dividend's intact, 46%, but you know, it's in a trading range. Hard to argue that, and you know, the typical MO when you see a stock in a trading range, like this and that, is you buy it at the bottom of the range and you ride it up to the top of the range. Wash, rinse, repeat. Pretty easy stuff, right? With a stop somewhat below in case, sooner or later all trading ranges, will eventually break out. This one broke to the upside there. Proved to be a whipsaw. Really got checked by that downtrend line. That's a little whipsaw through there. And yeah, I'll call that a whipsaw all day long. And then boom, the reversal. But so those are your levels. And even just if you would get a trade off this bottom of the range there, so you bought it at 492, which I just snapped on, and you rode it up to that top there, that's about a 20% return. Not bad at all. If you can take that out, you have the trend line just above, breaks that, runs up here to 768. Now you're at about a 57% gain. And then finally give you one more target just in case, again, these start to run and I don't do any follow-ups. Target that reaction high. It comes in close to that reaction high there as well. NRP, Natural Resources Partners, I would have covered this one, I believe, first up in the video. All right, I'm going to wrap it up here, and I'll double check if I've gone over this, and I have to stop and rewatch the video now to see what I've covered, or watch the video. And if I covered every stock I meant to, I will get this one out to you as is. If not, I have to scrap it and redo it. Like I said, when I jumbled up the watch list, I may have missed some. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.